Hello everybody, Preston Brent here with our weekly roundup for our trader user group. This is for a holiday ending week of November the 28th, 2014. I hope all of you, at least for our U.S. members, had a really good holiday week. You didn't eat too much food for the Thanksgiving holiday shortened week. For the rest of our global members, I am sure that you were watching the markets as OPEC really came out with their surprise announcement. And to some it wasn't a surprise that they're not going to cut production, and we had a pretty big drop in oil. But let's start, first things first. What I've got on my screen here is the weekly chart of the E-mini S&P 500 futures. As you can see here, and I've got a weekly chart on here for a reason. I want to show you guys a couple of things. I got a lot of data I wanted to show you, and I just want to kind of break it down for you so that it makes sense for you. Okay, so why don't we just go with it from that perspective. Now let me just get my drawing tool turned on here, and then we'll go take a look at the chart here. So as you can see here, this is a weekly chart, and going all the way back to this point right here. This is back in 2009, the low point in 2009. You can see this channel is definitely giving us this huge bullish run we've made since March 9, 2009. And we've tested the lower part of the channel many times. Again, this is a weekly chart. And we've tested the upper boundaries of the channel many times as well. You can see right now we are just slightly skewed just above the northern part of the channel. And then I've got superimposed on this another smaller channel. You might not be able to see it. You'll be able to see it when we go into the daily. That goes back to the summer of 2013 right here, where we seem to accelerate our ascent. Basically, up until this point, our vector up was like that, and now our vector up has accelerated, which tells me that we're coming to an apex where we're going to have a pretty good little pullback. Now, I don't know if that's going to happen before the end of the year or January or February, but that's what the charts are indicating. Also, looking at this weekly chart, you can see right there we've got a bearish divergence, as we say in our group, a BED in our chat room. And these are wonderful trades to take. We've made some great money on trading bearish divergences as well as bullish divergences. Now, understand this is a weekly chart, so this is going to take a little bit of time to play out. But we are at the top of the channel here, as you can see. So a little bit of a movement somewhere at least into the center of the channel puts us right around that 1918 area, almost right dead center of the channel. If it's going to be a bigger move down, you can see this blue dash line, which was the opening price of the E-minis for 2014. We'll go take a look at that in a minute. I don't think we're going to hit that, obviously, by December. We've got a lot of stimulus being provided by China. It was targeted stimulus. They had that, excuse me. They had a surprising interest rate reduction, the first one since 2012. We've got a lot of stimulus coming out of the Bank of Japan that about 2 or 3 weeks ago added a lot there. And then we had the ECB with Mario Draghi come out and talk about they're going to do everything they can to protect the economy. So all of that equates to a lot of money. A lot of money. And because the world is a soup bowl and money has to go somewhere, right now a lot of that money, and this is what confounds a lot of traders, is coming to the U.S. markets. And in the U.S. markets, a lot of it is finding its way in bonds, primarily via U.S. dollars. And that is why the U.S. dollar is doing one of these things, which is going up very strong. But let's break this down a little bit. And I wanted to just kind of give you a high-level summary here of just what's going on and just how long this thing can go on before we move on. So what I want to do now is let's just go into a daily chart of the E-minis just to kind of break this down a little bit more. So notice here we're just slightly north of the confines of this channel. It's been in existence since 2009. So if we come in and we take it down to the daily chart, and I'm not taking any lines off, you can see now that channel within the channel right here, right? You can see this blue dash line, which is the opening price of the E-minis in 2014 at 1837.75. Now you can see this channel within the channel is continuing to move up which tells me we can challenge the upper part of this channel before it falls down. But I think we're going to run out of some steam here. Now, I'm going to zoom in even tighter in just 1 minute, but I wanted to just show you a couple of things on this chart here on this daily before I zoom in and go in just a little bit more here, okay? So now you can see on this daily chart, we had a little bit of a bearish divergence set up right there on the RSI, and you can see that caused from this midpoint here to this point here, we actually had a really good pullback all the way down to just slightly below intraday the opening price of the E-minis at 1837.75. But it was just intraday, and then the very next day, bam, we had that huge V-bottom. A V-bottom is abnormal. And when you have, like this case, this was a 10% pullback, it's very abnormal. Normally you have it move up, come down, and do one of these kind of double tests, and then it finally starts working its way higher. This was, you could have just jumped off a two-story building, landed on a trampoline, and then bam, higher. Because at this timing, right in this area here, you know, like I said, we had China, we had Bank of Japan, we had ECB, and money begets more money. And it forces, absolutely forces money into the equity markets. And that's what's happening right now. Will it create a bubble? It could. But right now, as you can see on this chart, this is kind of where we're sitting at north of this channel here. Now, what the thing I wanted to point out on this daily chart, notice here we do not have a bearish divergence, right? So there is absolutely, there is no BED setting up now. There's just none. So on a daily chart, that tells me that any pullback can be minor. On a weekly chart, I think longer term, we're going to have a little bit more of a serious pullback. On a daily chart, no. And I think a pullback to the order of 2011 makes more sense. Notice on the weekly, I probably said around 1918. But that's going to take us into Q1 of next year, maybe even down below the 1837 area towards the southern part of this upsloping channel right here. But that's kind of where we're sitting now. Now, if I zoom in even tighter and just make this a little bit clearer for you guys to read here, and I apologize for all the drawings. Our members of our site, we go over this 3 times a week, so we know where the support and resistance levels are all the time, every day. You guys, you see this once a week if you're not a member, and it's kind of hard to follow all this. But let's zoom in a little bit here. So if we zoom in, staying on the daily chart for a minute, okay? So let me just make this a little bit bigger for those of you that have bad eyesight, can follow along here. You can see right here. Now, I've got, let's make it even bigger, a little bit bigger like that. You can see, let's make it just a little bit smaller like that. Okay. Now, again, we're staying on the daily chart here for a second. You can see, now this sell-off that we had on Friday, it was a half a day, very low volume, so I think that was just basic profit taking. There's really not much else to it the way I see it. Now, if we get follow-through, it could be a little bit more. You can see right here, it looks like a little bit of a bearish engulfing candle, where this candle basically engulfed the price range of the prior candle to it. You can see I've got Fibonacci extensions off the prior pivot high and the prior pivot low. So these are serving as what I call dry powder resistance, meaning we're at all-time highs. So how do you determine resistance at all-time highs? Well, you use Fibonacci, and you can see these areas here. Our first level here, which provided a little bit of support, is almost at an even 2060, all right? And that was our first area of resistance. We blew through it. We came back, closed right on it, opened the very next day, went down and tested it, and then we took off again. So that's a little bit about where this action took us. And then you can see right here the next resistance area, which I would call really our R1 level, right? Our R1 level is at 2088. Now, can we get up there? We could. We could have momentum take us all the way up there. But I think, you know, we're getting up at nosebleed territory, and I suspect we're going to come back down and test this S1 support level of 2060, which is just south of where we are now at about 2066. And then you can see as we step down, natural price level supports. for us, all the way back down to the 2011 area. Like I said, we have no bearish divergence, so any little bit of profit taking is going to be a little bit of just profit taking as we go into the end of the year. As more money tries to find its way into the market, we may have people prop up these prices by looking to get in and buy on dips, because we're still in a buy on the dip, and we don't even get dips. I mean, we just get, you know, a 5 or a 7 point pullback, and then buyers rush back in. But that pattern's going to break itself, and I can't tell you when, but I believe we will. I suspect the more natural stopping point is going to be this upsloping trend line, which we took out, which is the trend line within the trend line here. Or I'm sorry, this is the longer term trend line right here. This is the going back to 2009, and that would put us right at about 2054. Okay. Now, are we going to finish the year strong? Well, you know, this momentum can continue to carry us up a little bit, but I think as we get up into this area, it's going to have a lot of difficulty trying to penetrate here before we pull back down. I think a lot of new buyers are looking for some kind of pullback before we get a any significant move back up. Okay, that's kind of how I'm seeing it right now. So this is the E-minis, and if we come back in and let's look at the 2-hour chart, because everybody knows I love to use 2-hour juxtaposed against the daily, because it really gives you a good idea of just kind of where we're going. And you can see this bearish divergence. And I was pointing this out to our members, and I said, anticipate this. You can see this bearish divergence here, and I'm using the I'm using the RSI as a proxy, but you can also use the MACD and other indicators to showcase divergences on here. But in this case, I'm using the RSI. You can see on this 2-hour chart back here before Thanksgiving on the 23rd, I said and then as we started moving higher right here like this, right the day before Thanksgiving, I said we can expect here in the U.S. the 26th. I said expect some weakness coming into the end of the week, because we've got this bearish divergence setting up, you know, as I said, or what we call in our chat room a bed. And these make some really great trades. So you can see how now it just gave it up right here, and we came down and tested the 2064. We closed at about 2066. You can see a natural Fibonacci level right there at 2060, which was our daily, if you recall, our daily S1 level, our first level of support. And then you can see this upsloping trend line right here, which would be our second level of support, just below a natural price level support of 2054. So would not surprise me at all to see a little bit of a test here. We've also got an Elliott Wave 5, and as you guys know, Elliott Wave 5s tend to be the end of a trend, and then you have an ABC pattern, and then a kind of a trend view of a trend bias of, okay, where are we going to go from here? Now keep in mind this is a 120-minute chart. So just in summary here, and let me just kind of summarize what I've said on the E-minis here, just to kind of give you a little bit of an idea of what you can possibly expect. So I said on the weekly chart, right, on a weekly chart, we had bearish divergence. Okay, so that would probably show sometime out in Q1 or Q2, you know, Q1 or Q2. On a daily chart, okay, there is absolutely no bearish divergence in any of the indicators. Okay, on the 120-minute chart, right, we had a bearish divergence. So what does that mean? Well, what that means is on a daily with no bearish divergence, it's just minor profit taking. We can expect that. That helped us out, allowed us to position our trades or stay in some trades. On a daily chart, we got a little bit higher to go, I believe. But then understand on a weekly chart, this is indicating that we're going to have some pullback. And again, I'm not saying when, but the odds favor probably in Q1, because weekly charts tend to carry themselves out a little bit. So that's kind of how I'm seeing the E-minis. By the way, the Dow is going to follow the same path. Same thing with all the other all the other indices. They're going to follow the same path as well. Okay, they're going to have this short-term, a little bit of a weakness in price, medium-term, maybe a little bit of a run higher, possibly, and then a pullback. Now, again, this is not guaranteed, of course, but this is where the charts are lending themselves right now. The other thing that concerns me is on Friday, the Russell really had a hard pullback. I mean, if we look at it and I sort it by performance, right, the Russell was the most underperforming index. Look at this, folks. This is the Russell on a 120-minute chart. That's selling right there. That is a lot of people getting out of small caps. You can see this bearish divergence setting up. So we had a warning into this, an easy warning for those in our membership, and we pointed this out. I pointed this out to our members. If we come into the daily chart, on the RUT, you can see on the daily chart there is no bearish diversion. So this pullback right here was just profit taking, but we knew near term the odds highly favored a pullback. This blue dashed line was the opening price of the RUT, and you could see how far away we were from the opening price with the E-mini S&P 500. The RUT is just barely above it. The RUT closed at 1172, the Russell futures. But the opening price of the Russell for the year is 1156. I mean, just barely north of it. So that would suggest that we're probably going to come back and test that opening price again. And then if we come out to the weekly, right, and we look at the weekly of the Russell, and look at this bearish divergence on the weekly right here. Again, that would suggest you can see this shaded zone here. We're going to come down and probably test this shaded zone, which is around 1071. I don't think it will happen before the end of the year, but it could. But this is suggesting that near-term weakness in price, medium term going out maybe 30 days, 40 days, maybe not quite that far, 3 weeks or so. We could have a little bit of a move up, but then further term in Q1 going into Q2, we could have a larger pullback. So this is how these charts are reading to me. And remember, the Russell on this weekly chart, we're nowhere near all-time highs like we are in the Dow and the E-minis. We should have participation in the Russell on these small cap. We do not see it. Again, that's a warning sign, folks. You've got to keep that in mind. Let's look at bonds for a minute. Bonds is another really interesting thing, and it's confounded a lot of traders. This is a weekly chart of bonds. You can see this upsloping trend line here. You can see this upsloping trend line right here in bonds, and you can see that this is for the entire year. And bonds has just been a solid performer, right? This is a weekly chart of bonds. And this trend line has been very consistent for bonds. And this is what's confounded a lot of people. If you look at bonds, you can see right there starting in January 2nd, it has been nothing but going up. We broke the trend line for only a week and then 2 weeks, and then we actually regained it very quickly. And now we're coming up. I doubt we're going to get back up in that area, but once we get up in this area, this is going to be a seller's paradise, potential shorts. There is no bearish divergence on here at all. That tells me that any pullback is going to be slight profit taking, but the tendency is going to be to want to go higher. It's going to want to go much higher. That's going to be the tendency here. So bonds is higher. Now you would think, well, gee, we got all-time highs in the E-minis. We got all-time highs in the Dow. Why in the world are interest rates staying low and bonds moving up like this? Well, because I told you, you got China, right? You've got the Bank of Japan in Japan. You got the ECB. All of them putting money into the U.S. If you're a big hedge fund manager or a big fund manager and you're over in Europe and you can get a German Bund for 0.7% or a U.S. bond for 3 or 4 times as much interest rate, 5 times as much, where are you going to put the money? You're going to put it in the U.S. And what do you do with the U.S. money? You buy it with U.S. dollars. What does that do to U.S. dollars? It drives it up. What does that do to commodities? It drives it down. Oil, it drives it down. Just natural. Without any market influence, it drives it down. So we're getting this double aha effect here. It's like a Goldilocks scenario. Now, at some point, this thing is going to end, and we're going to have some, the music is going to stop, and there's going to be 3 chairs and 10 people wanting to sit down. There are going to be a lot of people on their ass when this thing ends. So you've got to be careful. All right, you've got to be careful in this market. But as you can see with bonds, we've had this huge move up on this weekly chart. And, of course, if we come into the daily and we look at the daily of bonds right here, like this. You can see, and I was pointing out to our members here, this is a beautiful chart right here on the daily. You can see right in this area here, this rounded pattern here. And it looked like initially it was going to be, some of you may be familiar with a cup and saucer pattern. I said, that would be the odds favorite. You can see we came right down and then we just rolled right back up. I anticipated right in that area there we would have one of these moves like this into this area here, of which then we would want to start shorting it for a possible move down. But we just blew right through it on Friday. I mean, Friday was just one of those kind of days where, money was flying heavy into bonds. Okay, this is a three-leg here, which would indicate that we can come up into this area here. If we get up into this area right here, would not surprise me with all the money coming out, but we're going to start looking for shorts here as we start to move higher in the bond market. Again, we've got at this point right here just a little bit of bearish divergence, not much. If this goes much higher and this comes up, then this is going to flatline, which means there is absolutely no bearish divergence here. And without any bearish divergence and any pullback is profit taken before we come higher into this shaded zone right here. So that's a little bit about what I'm seeing in the bond market, okay? And the bond market would seem to indicate that this is just where we're going right now. And there have been some great plays for our members that are following along with us in this. And if we come out and we look at volatility, volatility edged up on Friday as well. You can see this trend line. Let me just blow it up a little bit here. You can see this upsloping trend line. And it's been very steady and just very quiet, right? Just kind of going unnoticed by everybody but us. And I was showing our members again that we've got to be careful because keep in mind on the 2-hour chart we got a potential pullback coming. On the volatility we got this upsloping trend line right here and we went down below, but we quickly regained it because once we broke that area, I was anticipating here, but within the very next day, it says volatility just wants to stay high. So that is the support area there, and it's very, very subtle. But, with the starting point back in the summer, we've been making higher lows in volatility, higher lows in volatility. And that one time we actually made a lower low, the very next day, boom, we bounced right back up again. So volatility seems like it wants to find this upper area right up here, which would put us over 15, which would go in tune with our 2-hour soft pullback that we're looking for. Now, it can always get worse, but that's kind of, and I was pointing this out to our members as well. So for our members that attend our Tuesday and Thursday pre-market sessions as well as our Sunday night sessions, that's kind of what we're going through, as well as potential trades. So this is volatility. Now, if we come down and look at currencies, well, I don't know what I can say here. We've just had the dollar the markets went crazy on Friday with the dollar. You can see right in this area right here, we've been in this tight pattern right here, like that, and we just broke out of it, right? Well, let's get rid of the image. So you can see right there, we broke out of that pattern just barely, but it really hasn't broken out yet, because on the short-term basis with the dollar, as you can see here, for those of you that know how we like to trade, you can see that again on this daily chart here, we've got a little bit of a bearish divergence setting up right here, right? So we got this bed setting up here, and you can see right here that we're also on a 5-leg. We got that traditional 3, 4, 5 leg here, and which would give us an A, B, C kind of pattern. And again, it may not be that wide, but it would give us an ABC type of chop pattern until we determine which way we're going to go again. With that bed, it would suggest that there's going to be some downward pressure on the dollar. It may even come all the way up to the 89.47 area, but there's going to be a little bit of a downward pressure on the dollar near term, or going into the end of the year. At least that's the way this chart is indicating. The only thing that changes the parameters here is all of this money, again, that's coming over from Europe and Japan into the U.S. dollar, and then from the U.S. dollar, it's coming into bonds and equities. That's kind of where the money is going. So that does kind of change the paradigm just a little bit, which can keep this up higher longer, because this is not a normal market, folks. For those of you that are just starting to trade, you probably sense the frustration in a lot of old-time traders, because a lot of these things, a lot of the normal correlations, just they don't make any sense. For us, I don't really care. I'm agnostic. I could care less. I just follow the price action, and what is the price action telling me? And that's kind of where I go. And right now, this is what the price action's telling me. So just kind of watch these things here with the dollar. We've also got the pound, the British pound. Now, we traded this wonderfully to the upside. We got out of it after the Scottish, or before the Scottish vote. You can see the pound has been in this really tight channel coming all the way back down here. We've got this, now this, in this case right here, folks, it's a little bit different in the pound. I think of any currency outside of the U.S. dollar that can show some strength is going to be the British pound. Okay, that's what I think. You can see right there on this daily chart, we do have what we call a bud, a bullish divergence, right, setting up. As we make lower lows coming down, we're making higher lows in the RSI. Now, we came right back up, touched that upper channel, and then bam, we sold off very hard right here. We are on a three leg. That would suggest a move up, a move down, stabilization, and then a move higher. I remember telling our group I took out a long, I was along the British pound on this potential move up, giving us a little bit of a four leg here, and then as it started to roll back over, I stopped out for small gains, and I want to see if this thing can stabilize here, and then I'm going to look for another move up. The minute we break that upsloping channel and we break that 50 EMA, then I think we're going to be back up in this area again. So let's watch this. This is going to be a future trade for us. Again, the British pound or FXB. And you know there's ETFs that track all the currencies. So for those that can't trade currencies or Forex, we do the ETFs. Okay, so that's kind of how we're sitting on that. So that's the British pound. And I showed you the dollar. We've had some great trades in the yen and the euro, but you could trade the euro or the dollar, but those are some of the great trades that we got. Gold. There's a really interesting thing on gold coming up Sunday morning. The Swiss are voting on whether to buy more gold. Basically, the Swiss have about 540 billion in banking reserves, and they want to vote on a law that says out of that 540 billion or so, they got to maintain 20% in gold. Right now they have about 8% in gold. So that works out to another 60 billion in purchases in gold, which, everybody's saying the market, you know how the gold bugs are. Oh, that's going to drive gold up here and gold up there if they vote yes. Well, right now, the preliminary polls are suggesting only 38% will vote yes. The vote is going to happen 7 o'clock in the morning, New York City time on Sunday. So just to kind of give you a date on that, you'll be able to see it in the papers. But if we step out, you can see just how gold has been trending down on this daily chart right here. And we're on a three leg. We got a four leg print that would suggest the near term is still a little bit lower. I'd stay away from it until we can clear both the 50 and the 200 EMA. I think gold right now, because inflation is just non-existent globally, I just think gold is going to be a sucker's bet until we start to see inflation start to kick in. And unfortunately, when inflation starts to kick in, it's not only going to kick in the U.S., but it's probably going to happen in China and in Europe at the same time, and you're going to see gold go through the roof. But that's not now. Okay, silver is the other one. Again, the same thing with silver. You can see this sloping trend line here, this big down move right here with silver. I think it's got further downside to go. We got that 3-4 pattern, so I'm looking for a 3-4-5. We may even come down and break the 15 level. So again, just not very pretty, all right, and not pretty at all. Now let's take a look at oil. Oil was taken to the woodshed. Okay, here's a daily chart of oil. It's ugly. There is no bullish divergence at all. Notice the next support level, 65.05. Let's step out a little bit just to kind of give you an idea of where oil can go. Okay, and there's a lot of speculation on where it can go. All right, here's a chart. The low of oil going back to 2009 was around 33.20. That goes back a long, long time, right? And we can just go back in time, not before 2004, right, was oil below 33.20. So again, I'm looking at a weekly chart of oil futures, the continuous contract, so that it can kind of stay on the screen for us. And you can see here just where we're sitting right now and the next support levels on the way down. Okay. Now, what do I think is going to happen with oil? Well, here's what the charts are telling me, and what we got to be very careful of, because I'm in oil right now. I've got I'm playing a short strangle in oil. Volatility is at 100 percentile, which means volatility in oil is the highest it's been for the past 12 months. So you can get good premium in oil. You got to be careful with it. But you can see the support level right now this is our S1 level, 65. No one knows where oil is going to go short term. And then we got 58, 50, and then all the way down to 33.20. Now, I rode oil last time, oil shorts. I took it all the way down from 150 down to about 40. It's one of the best trades in my career. And this time was a little bit different. You can see the symmetrical triangle. We had a break here. If we were to measure the distance, right there, the measuring distance between the two, it would suggest oil is going to come down to this part right here, right around an even 50. That would suggest where oil's going. In fact, if you look at my charting system, it would suggest somewhere down in that area as well. But not before we have a counter trend bounce like that. That counter trend bounce is going to sucker a lot of people. It's going to be swift because there are a lot of shorts in here, so there's going to be a lot of buy stops triggered, which is going to move oil violently up. And then once that's done and there's no more buyers, I think it's going to roll violently back down again. So that is kind of how I'm seeing this right now with oil. So net, I'm expecting a little bit of a move up and then a move back down again. That's kind of how I'm seeing this, right? So let me just adjust my screen a little bit here so I can get a couple of things going here. So that's kind of how I'm seeing this right here. You can see down here we're way oversold. We're as oversold now as we were when oil came down to 33.20 over here. There's a lot of speculation as to why they didn't cut production. You're reading a lot of it, but at the end of the day, does it really matter? If you're in a trade, you're in a trade. And you got to follow the price action. Right now on this weekly chart, you can see where we are. So we're just slightly above the 65.05. If 65.05 breaks, we're going down to the next level, folks. You can see this huge, fast move down here. And we're actually less oversold on the daily than we are on the weekly. So that would say near term, possibly a little bit further move. You can see the 5 leg down here at the 50, which is where I think our final resting place will be. But to get between where we are now and the 50, I think we're going to have this. We're going to have some buy stops triggered. It's going to have a violent up move, and then that'll be a time for anybody that didn't take this short trade to jump back in again and ride it back down. So that's kind of where we're sitting here. If we look at gasoline, gasoline is also ugly, ugly, ugly. Let's come back into the weekly chart on gasoline. Now, we've played gasoline futures before. You can see where we're sitting right here. We're sandwiched in between some major support and resistance points on this weekly chart. And back when oil made its lows back in 2008, gasoline did the same thing. Okay, it trailed the timing of oil just a little bit, but you can see where we're sitting right here. Again, it's anticipating that gasoline can fall even further on this weekly chart, but not without a violent up move where buy stops are triggered. Okay, so it's going to be very similar in this area right here. So you can see right here we are oversold on the daily. You can see on the weekly we are also oversold, but even more so on the weekly. So that would mean that we're going to get a bounce, but just be careful and don't get suckered into this bounce. Okay, that would be the way the charts are telling me. I can always come out different, but that's the way the charts are telling me. All right, folks, there's a lot of other things going on in the markets, from the technology sector, biotech sector, industrials, consumer cyclicals, staples, and some other areas as well. Our members will go through all of this on our Sunday night session. For those of you that are not members, I highly encourage you to check us out. We're doing well. I'm posting trades in our chat room, our daily chat room. You guys can, we're making some good money, even with some of these crazy moves here in the market, and I'd welcome, as always, members on board. If you have any questions, just drop me a line. Let me know. Otherwise, everybody, have a really great weekend, holiday weekend to all our U.S. members, and I'll see our members Sunday night. All right, everybody. Bye now.